all the employees have some stake in it. So that is just a key piece of our DNA in anything that we're doing. And then the other component to it is our mandate is to generate strong current yield, current income. So that's going to be a common theme in any type of investment that we're looking at, is that kind of current cash flow kind of profile and component.
Here we go. Ready?
Let's do it.
We got guests today, Eric. I'm stoked for this. This is our second time ever having guests, so we're still noobs at this.
Yep.
So, listener, give us lots of grace on this one. But today, we have Coulton Creek Capital. Scott and Will, say hi, guys.
Hey,
Hey,
listeners.
everyone.
There we are, listeners. So, Coulton Creek Capital is a local to us for all of our international viewers. That's a joke. They're local. They're here in the Denver area.
Yep.
So that's awesome. So thanks for coming by, guys. This is awesome. Welcome.
Yeah, thanks for having us.
Yeah,
we're
really
here.
appreciate it.
Stoked. And so today we just want to learn more about Coulton Creek. That's it. It's pretty simple. I think the viewers are interested in hearing what type of investments are out there in the alternative world, and you guys represent a core kind of segment around private equity and debt, especially in real estate. It kind of hits all three of the hot topics we like to talk about around here. So I was stoked when I found out you guys were willing to come up here and join us for this nonsense. So tell me, one of you, tell me just high level, Coulton Creek Capital, what is it? Where are you? How long are you in business? Tell me everything you want to know about it.
Yeah, so I think our story is kind of unique in that we were founded in 2013, so we're beyond 13 years now in our tenure. But the genesis really even predates that, in the sense that two of our founders were the principals of an investment bank, and were making investments outside of the bank. And they were funding those with some other folks that they had business relationships with. And they did that for 5 or 10 years, their own money and these investors' money. And then in 2013 is when they decided to formalize that business, called it Coulton Creek Capital. And at that time, Coulton Creek was established, the platform was established really just to invest the money of the founders. There was no concept of or at least an emphasis on we're going to go raise money from other people. We're just, finding our own deals, and we like them, and so we're going to put our money there. The other thing that I think is a key tenet of ours, and again, that investing our own capital is something that continues to this day. All of our founding investors are still heavily invested. All the employees have some stake in it. So that is just a key piece of our DNA in anything that we're doing. And then the other component to it is our mandate is to generate strong current yield, current income. So that's going to be a common theme in any type of investment that we're looking at, is that kind of current cash flow kind of profile and component. So again, founded in 2013, really just kind of investing our own money. Over time, we have evolved and we have brought in outside investors, and the function that they serve to some extent is helping us manage concentrations so that our portfolio isn't fully invested in one or two assets, as well as just continuing to kind of provide us a deeper pool of capital to invest from. So that is in large part kind of the impetus for us bringing in outside investors. We're serving our founders, and then we open up those opportunities to other third parties to come in and invest alongside us and participate in the investments that they select to participate in.
Let's talk about those investments. Can you give me an idea of I don't know if this is the right way to say it, or like a typical investment deal that Coulton Creek would offer is the right way to say it, possibly. Can you give me an idea of what you guys kind of concentrate on?
In the industry too.
In the industry too, yeah.
Sure. So we are very much focused on commercial real estate opportunities. We are an allocator to commercial real estate. So what Will and I spend our day doing is looking for operators, developers, folks that are the boots on the ground with a niche or an expertise, and we are allocating founder capital and our investor capital into commercial real estate projects. So we're out finding, we're investing in all property types, all geographies. We are out looking for opportunities to place capital into commercial real estate projects.
Let's
with an
go
emphasis
a layer
on
deeper into that. We'll put our nerd hat on. Well,
Sure.
I'll pretend like I know what I'm talking about. How are you? Is it debt? Is it equity? Like, how are you? What are the vehicles you guys are using to get that capital to, say, a developer, or say, to stuff like that?
Yeah.
Sure. So, yeah, I think that's a really important question because it can take
Thanks
a
for
number of
saying that.
different forms.
I just made it up.
I think you're onto something there. So, again, because we have this sort of unique operating structure where we're putting our own capital out, we can be nimble as far as where we want to participate, and we're going to try to find sort of that best risk-adjusted return. Many times, because we have this current return mandate, that ends up being debt because contractually as a borrower, you're obligated to make regular payments. And so that, is something that we're attracted to. That's going to be the bulk of what we do, certainly the majority, but we can play at kind of other ends of the spectrum as well, including equity, sort of on a opportunistic basis. But most of what we're doing is going to be debt or debt-like capital placed into commercial real estate.
This is going off script a bit because now I'm just curious. Like, when you say you go out and like meet with people, are you like meeting with construction companies, general contractors? Like, how are you guys finding them? Does that make sense?
Mm-hmm.
Yeah, that's a great question.
Thanks
and that
again.
is really good questions coming
Thank
today. The a lot of that is that really is what we're spending our time focused on is finding the relationships. Some of that's coming from our network or referrals from people in our network. Some of that's coming from brokers that have a client that's got a need for I need capital to round out this project.
Yep.
And I know an allocator, I know a provider of capital in Coulton Creek and making connections there. But really, that's a problem that we're trying to solve every day of finding the right sponsors, the right, as you say, it's developers, it's operators, it's folks that are buying and operating assets that we're trying to get in front of to really find the most capable, most talented, most really aligned groups that we can work with. So,
what kind of? I mean, now I'm going way off script because I'm just curious. Is it like warehouses? Is it warehouses all the way to condo buildings? Like what is it? Yes,
all of the above.
Great question.
That's right.
New development as well.
Yeah, some component of new development. Multifamily or apartments is going to be the major fruit group there historically and today. Some of the other sort of prominent asset classes that we've focused on in our history.
All the warehouses in Boulder for that green stuff.
Those have been challenged lately. So thankfully we dodged a bullet there. But hotels, self-storage, and for sale residential like condo projects.
Yeah.
That's where we've tended to focus. We like the risk profile there relative to the kind of returns that we're able to generate. And I think there's just some experience that's developed in those asset classes over time. So
that's awesome.
It's and relationships. So we're able to kind of leverage and kind of go back to that well multiple times and understand a little bit what we're doing and who we're working with and things like that.
What a cool thing to be able to like drive down Denver or wherever and like be in your car and like go through all the new. I mean, Denver's exploding right now, and be like, oh, I helped finance that. I helped finance that. That's pretty cool. That'd be cool. That'd be a cool feeling.
Are you mostly in the Colorado area or all over?
We're really geography agnostic. We are across the country today. It's for us. It's less about targeting specific markets and more about finding the right operators, finding the right people.
That was going to be my next question. Yeah.
Yeah, and it's we have a macro outlook. We dig deep into the markets that we're going into, but it really starts at the operator level first. It starts at the relationship level first, and then we're getting into trying to not have a geographic concentration. We really, one of the benefits of sort of how our platform is put together is that we have a lot of flexibility, whether it's property type, geography. We emphasize diversification.
Very cool.
Can you guys even talk about, I mean, what's the coolest thing you guys have been involved? Like, is there like, well, we helped finance the Empire State Building kind of thing. Like, is there anything like that's off the cuff too? Because if I was in your shoes, I'd be like, the new football stadium, we gave money to that.
You're a little bit asking us to pick our favorite kid here.
I know, that's why that's not fair. I know, that's what I do. Tell me about the investor though. So I'm going to make some assumptions, and you guys kind of validate or point me in the right direction. I'm assuming accredited investors.
Correct.
Yep. So that's a check box. Got to be accredited. If you don't know what that is, Google it. If you do know what it is, that means you probably are. I've learned that. Tell me more. Who else? Give me an idea of who the investors are. Like if someone's listening, like, do I fit that profile?
Yeah, I think to your point, accredited investors, kind of self-select as far as their level of sophistication probably being a little bit higher.
Yes.
So generally speaking, that's going to be sort of the pool of folks that we work with is people who are interested in something besides being in public markets.
Yeah.
And have generally speaking some understanding of how that works, enough to understand kind of what we're doing and appreciate sort of the benefits or some of the risks that they would potentially are coming into.
Yeah.
And again, we're doing income and real estate, so it's people who kind of are attracted to one or both of those things, which is a large segment of probably investors, but typically it's folks that appreciate real estate and are looking for some income.
Yeah, I love that.
How do you typically find investors, or how do they find you?
Yeah, that is a really important question because we're constantly solving for that in a sense, because we're out there really focused on putting our own money to work, and investor growth for us has largely been organic. So it's been very much sort of word of mouth and referrals and things like that. We would love to be able to say we have a program for raising billions of dollars, but it just isn't really kind of to date the emphasis for us. It's been a little bit more of just sort of organic growth there.
That's cool though.
I think
that's cool.
Yeah, and I think something that resonates with us, and I think that what that highlights is just the importance of relationships and those connections, and we're very focused on that as well.
Mm-hmm. Yeah, we always say, especially when it comes to podcasts, you're going to get the joke here in a second. We don't want to be the biggest; we just want to be the best.
Yep.
For New Direction itself, I mean, we just want to make sure we're working with people that are cool and that have integrity and that kind of enjoy the world of alternatives.
Mm-hmm.
All right, Coulton Creek Capital. We're going to do a little recap here. They're local in the Denver area, but the investment's everywhere. I love the fact that how they lead with. I'm talking about you guys are in the same room. How they lead with how they're putting their own skin in the game. I think that's cool. I think it's a lot of credibility there. Let's talk about. Have you guys, let's make it a little bit more about New Direction now, of course. Have you guys had investors use their IRA into your investments?
We have. It's, a lot of that really stemming from trying to meet investor needs and also meet some of the needs of folks on our side, right? As principal investors first, it solves a problem. It solves a personal problem of wanting to allocate a portion of my own self-directed IRA there, but that's been something that's come from the folks that we're working with and that are looking to get alternatives into their IRA, and so we have. People get excited about it because it opens up another bucket of capital that they can allocate to private real estate. Obviously, there's any number of advantages to using an IRA from a tax standpoint, and it's something that we've been at for a while, and candidly have spent some time trying to take some of the friction out of that process and make our investments more readily available for use in an IRA.
I'll just tack on something here. I've been been in the shop for over a decade now, and when I first started, I mean, I understood the concept of an IRA, but I had no appreciation for what self-directed IRA was and how that potentially interfaced with what we were doing. So it was sort of like this whole new world, you know. And again, this was early on, kind of in the history of our company, that we were already working with the IRA investors, and that's something that we have in really kind of benefited from in kind of our growth. Is folks again are finding folks that understand how to invest through their IRA and folks that want to accept that money, and so there is a natural kind of marriage there, and I think that's been mutually beneficial for us, and that's been part of our growth to date.
Do you feel like you factor that in, the ability for people to use their IRAs to invest in your investments? I mean, does that change how you have things set up? I mean, talk me through your process that you've done to make it, more frictionless on your end. I know there's obviously friction on the other side of the equation.
What do you mean? That
we experience. But, I'm just thinking of other, private equity groups out there that might not know really about this, what have you implemented that has made it easier for your investors to use their IRAs?
Yeah, I think part of it is just general awareness. I think something that we encounter is each IRA custodian is its own animal, and each one is going to have a very different process and forms. And I mean, it's just amazing how differentiated they are in terms of what they require to have one of their clients invest with us. But we've come to the point where we have a pretty good sense for what they're going to be needing, and it's not that much. Generally speaking, it's sort of, hey, if it's normally us and the investor, now there's a third person that kind of needs to sign the paperwork, and then between that, it's the investor and their custodian that I think where that process largely lives. From our perspective, it's not too bad. We've got a little bit of reporting requirements that we're kind of doing anyways for our own investors, and we've got paperwork that's IRA specific that we try to have out there. I mean, we don't want to spend extra time on it either. The potential kind of complication can be timing, because we're going to do we're going to make an investment because we like an investment. We're not going to make it predicated on us being able to go out and raise outside capital. So we can kind of provide some flexibility there, where we'll go ahead and sort of commit on behalf of those IRA investors while they work through the process with their custodian, and then we just kind of wait for the funds to show up.
Yeah, I mean, you hit on something that we talk about often, and this is more about our industry, is that there's no standard yet. It actually drives me crazy. And how another custodian does it compared to, say, New Direction can be completely different, but it's the same end. If we all just got in a room and agreed, imagine that crazy thought. Talking to you, industry, 'cause I know you're not listening. All right, well, cool, man. This has been awesome.
Yeah.
So they can learn more about you guys at your website, right? I believe that is, because I wrote it down, ccrcapital.com. Is that right?
That's right.
You guys are like, is that right? Haven't been there in a long time. Any other questions you got, Eric?
No, I think you guys answered a lot of questions and great information. I mean, again, I think what we were talking about before we started recording is how cool this industry is and how many different options are available, and it's great for us to be able to sit down with you all and hear your insights on the different industries that are out there. It's awesome.
And you're in the great state of Colorado.
Yep.
And one of you's a Buff. Did one of you go to school?
Sco Buffs.
Sco Buffs,
All right,
baby.
there we go.
Sco Buffs. I didn't go there, but I live 5 miles away from it, so now I'm Sco Buffs. All right, gang. Well, thank you for being our very first ever private equity sponsor.
Thanks for having us.
Yeah.
Capital sponsor in the podcast.
We should do this again.
We should. Oh my gosh, yeah, please do. If you guys got any ideas, come back.
Yeah.
And for our 55 listeners, if you have any ideas, let us know too.
Yeah.
All right, gang. Thank you guys for coming. You guys did a great job. Appreciate it.
Thank you guys.
Awesome.
Thanks.